is retail all right, or is it, it's like, what are you looking at today?
We're kind of in the beaten guide down portion of the calendar, and this is a time where you just sort of you bide your time and you're looking for exceptions, right? I mean, Home Depot and Lowe's reported exactly what you'd expect them to do as kind of respectable corporate citizens. If you're going to try to grind a trade out of there, I guess you could, but we both know the housing market is what it is. Nothing that was going to be said in the State of Union really kind of was going to change that. We saw TJX, which I'm long, love that company, terrific company. They do what they do all the time, which is they had comps of 5%, which is great. That's terrific. People like going to their stores. Traffic was up. That's terrific. There was nothing exceptional there, nothing shocking. And they were cautious for the rest of the year because everyone cautions. It has to be so good for a retailer to be dumb enough to come out and say in the first quarter, we're guiding the whole rest of the year higher because we have a super great insight into the holiday season right now. We have a really good vibe on back to school. It's the end of February, and that's where we are. It's just not going to happen. And so, it's of all the earnings seasons, and normally I'm kind of an earnings wonk in terms of the retailers, but this one's the plug and chug. This one's where you're just kind of going to get what you see, and it's going to be the reaction to it. I mean, if AI is going to destroy shopping, it's not going to start at TJX. People are still going to love that treasure hunt kind of the visceral feeling that you get. Shopping is much more social than people think, and especially for a place like TJX, where a lot of what they do is simply based on the idea that as they put it, every 10th hanger contains an almost irrationally low priced product. And people love to go out and hunt for it and find it, and you can't replicate that dopamine rush that people get from shopping, which sounds silly to say because everyone loves to bag on how they hate shopping, but it's just not true. They also love to find a deal. Who doesn't like a deal? Rich people like deals, poor people like deals. Everyone kind of likes to get a bargain. That's what TJX is offering. It's not sexy, but it's just, I guess, sexy, and it goes up 25% a year type of way. So, it's that's great. Is the consumer fine? That brings us to the other problem, which is the Supreme Court ruling where tariffs were thrown out and ruled against. I know a lot of people that instinctively they wanted to buy that. To me, that's a sell it. All you've done is just replace something bad that was kind of under control with just randomness again. Which doesn't mean we're going back to Liberation Day lows, but we're quite a ways off those lows. And companies had adapted to the environment that they were given, and now we don't really know what it's going to be. So, I think that's what we saw, the confluence of the scary research that was out last over the weekend, combined with President Trump saying, "Well, I'm just going to do a 15% blanket tariff on everything." That just kind of gave a pause mark on a lot of these retail stocks. And so we've got a lot of earnings coming, but I'm not expecting anything too super shocking.
Hey,
All
Jeff,
right.
quick question. On Home Depot, the CEO came out and was sort of cautious or negative on consumer sentiment and his comment on the willingness of consumers to invest. Is that a telling comment from him, or is that unusual for him to come out and say that, or is that sort of typical for him to be cautious? I'm just trying to gauge whether that is a true read on the consumer in all these retail stocks.
It's been 3 years of that, and particularly in construction in general. It's if you're gonna play kind of the Lowe's Home Depot game, what's unusual there is that Lowe's has had a great year so far. Normally, those trade absolutely lockstep, and they've been trying to differentiate their business models, but it comes down to whether or not people are gonna go out there and buy that big ticket house, whether they're gonna go out and do the project. And the answer is no, not yet. They both described Lowe's and Home Depot described the housing market as frozen. I'm not sure to what extent what it needs to do to thaw, but that's where they've been for a while now, and the stocks have kind of reflected that. No one's doing the big projects. But, it's that what's the real sentiment like? And people are going to TJX. They're not building a swimming pool. That's kind of where we are. And those companies have said exactly that for 3 straight years.
Okay.
So if you're looking at three consumer or retail stocks to have for this year, what are your top three if you want to share those?
I love TJX. I think that that's going to be I think they're going to continue to do what they do. Target is sort of my wild card. We hear from them on Tuesday. That's going to be a big day for them in terms of how they're going to turn around. But there's a lot of low hanging fruit that I think they can just kind of change the way they block and tackle as an operation, after the just death march that we've seen on that stock over the last 3-4 years. I think that they've got a real chance to do that. And it's I've been long Walmart. Sometimes I feel trapped. Sometimes I feel super prescient for doing that. But in these uncertain times, there's a lot to be said for just the largest grocer in America. They have an enormous share of your basic good stuff you can eat, kick, and drop on your toe, as well as a little discretionary kicker. And I think they are also the best position to be on the earnings benefit side of the AI explosion. I mean, all this CapEx spending, that's fine, but the people who made money off, for instance, the dot-coms, ended up not being the guys who were bearing the fiber optics, but rather the Amazons of the world. Walmart's going to be the leading kind of case study of whether or not these savings can be realized and whether they're real, whether agentic selling, as they call it, is real. Well, who's that going to benefit? It's going to benefit a company that sells a million different things.
Yeah, so I think for people who are listening to kind of explain a little bit of how I hear what you're saying is, listen, you can bet on a chip maker that's going to invest $100 billion in capex that they've never done before, that they're kind of and we don't know what the payout is going to be. Or you can look at a Walmart's capex, which they know exactly what they're doing. They're going to build a building, fill it with stuff, sell it to people who need it, and that's a completely different risk profile. And you know what? If AI works out, it's going to benefit people who are selling things or people who have to think about how to sell things versus the companies that built the big chip factories and data centers.
And Walmart's not cheap. The only time it gets cheap is during a big market crash because it's expensive because of that certainty they provide. It's a $700 billion company with 3% net margins. You move your net margins up by 50 basis points, and it starts looking much cheaper pretty fast. They're in a pretty capex intensive kind of period right now, and they have been for the last few years. It's starting to pay off for them. The scale just can't be matched. They can get products to customers within hours to like 95% of the country, which is just amazing distribution. I mean, it's amazing the way they've been able to lever that store base. And what they've been spending money on is making every store a little distribution center. So all of a sudden you go from just being a big box store to we have 5,000 distribution centers spread throughout the United States. They're within 95% of the country is within 10 miles. Once you kind of move things around in your store to make it and track your inventory well enough, both of which are sort of computing and tech driven type of ability to do that. Tracking your inventory is a huge, complex, ridiculous problem. But if you can do it right, then all of a sudden, again, you get that leverage where your stores become distribution centers because you know where your inventory is. That's an enormous boost for them. Delivering groceries the same day. People have been trying to crack that market for years and years and years. It's ever since Webvan. It's for literally a quarter century. People have been trying to do grocery delivery. Walmart's finally going to be able to do that. What's that worth? Well, it's groceries. So not a ton. David, to your point, it's there's the coffee bean people and the ground coffee people, and neither one of those sellers is making a huge raging margin on it. It's just how people, however they want their beans, Walmart's going to sell them to them.
Now, just lastly on Walmart, I don't know if you recall, did they say anything about the consumer? And the only reason I mentioned that is a stock that I own, Halion, HLN, which sells a lot of products in a Walmart, like Tums, Sensodyne toothpaste. They're down 7% today for a variety of reasons. They reported results not so great, kind of a lower end of guidance for revenue growth. But one of the things they said that impacted it, or two of the things, a weak cough and cold season. In addition, weak North American consumer outlook or sentiment, which if you're saving money on Tums and Sensodyne, the economy is way worse than it seems. I don't know if that's just their excuse or other retailers saying that. Is Walmart saying that the consumer's been a little bit softer?
They always say that consumers, it's consumers continue to be opportunistic in terms of their shopping. You have to kind of go back to the annals of recorded history to find a time where merchants came out and said, "Boy, the people are just chucking money at stuff. It's an unbelievable. The bounty is just